Hello, everyone. It appears more and more likely that this market is going to want to continue to resolve itself higher. However, we must admit on the short term, we're getting very overbought and we're doing it on lower and lower volume with smaller and smaller price moves, which means, if anything, technically another rally on low volume will get us the 200-day moving average. A reversal there will give excellent short sell setups, which of course I'll be using inverse leveraged ETFs. But the bottom line is, while the rally is good and there's some positives out there, at the same time, it's a negative way to wedge back to previous resistance points on the NASDAQ. So the NASDAQ, even though today, as you can see, it's above its 50-day moving average, technically that means it switches to neutral. But my God, it's hard to really, be 100%. So this is a cosmetic sell, basically just getting us into our correct operational mode. By us switching to neutral doesn't mean that I'm any more bullish or more neutral than before. I still see some positives. I see how this could work itself out is if we pull back on lower volume, below average volume, then we could set up for a higher rally. But the low volume wedge up is indicative to me that we might fail here. So I'm going to keep an open mind to it. I like the fact that Facebook is, even though it's ugly as shit, is producing consolidation pattern. Apple has refused to sell off. It could be rounding out a base. And then Priceline went and hit a new high today. Google's basing out. And Amazon I have buy stops on. So there's reasons to believe that this market can move higher. Just my problem is the volume is lacking, and it's getting lower and lower and lower as this rally continues. As you can see, the initial volume burst, and then a taper off ever since. Same thing can be said with the Russell 2000. I got to have my Market Smith up with the Russell 2000 on a daily chart. You can see a similar situation off the lows. Volume started pretty hot, and now it's just declining and declining and declining. So overall, just not the kind of price action you want to see if you want to be very bullish. The Russell 2000, technically, neutral condition. I can put it under neutral conditions. Sell signal. Technically, our model's still sell signal. I'm going to want to see the intraday highs of 1168 taken out before it switches. But, overall, guys, I'm pretty neutral here. The S&P 500, same similar situation. I don't know how you can be bullish on this price move off the lows. Very overbought. I don't know how you think we can just keep on going, but it's possible. But at the same time, if we don't reverse on huge volume or heavy volume, creating excellent short sell signals, I could see a lower volume pullback, then leading to finally a higher volume rally. But overall, there's a lot to be left to the imagination. Don't look too much into it. Technically, all of our models are under a neutral condition. But I tell you what, the Russell 2000 and NASDAQ, I mean, it's just because they're above the 50-day moving average. And with the 50-day moving average trending down, the sell signal's more prominent. What you normally now want to see is with us above the 50-day moving average to see the 50-day moving average start to trend higher. It's still trending lower on both of these indexes. So it's a quasi-neutral, basically sell signal remains in effect for most of these indexes. And that even includes the S&P 500 and Dow Jones Industrial Average, even though they're trading above the 50-day moving average. With those 50-day moving average still trending down, technically it's a quasi-neutral, mainly still a sell signal. But keep it simple, guys. Don't look too much into it. Sell side, TVIX is closing below those September lows. It's a full sell signal on an end-of-day basis. If you got a market order on the open of the longs after the long signal, you're now leaving with a very tiny, tiny, tiny itty-bitty loss. 758 would have been where you're filled at, 743. Tiny loss in the position, but you would have less than 20% of the original position if you were taking all the sell signals throughout August and September. But kind of unfortunate that we didn't get more bang for the buck on that move, but these things don't move like they used to. And then 50% sell signal play. Play is closing below its 20-day moving average, 5-day moving average, and 10-day moving average, on higher volume. So the day before, it was technically, technically a sell signal. So what I did is I moved half the sell stops to below 39.76. Good thing I did. Those were taken out pretty early. But now what I have done is I've moved my final sell stop to 38.17. However, if you're using end-of-day signals, the first sell stop was a close below 39.22. As you can see, a 38.61 close. That's your 56 That's your 50% sell signal. Mine was the move below 39.76, so I got out of a lot of it with some pretty good, with a good fill, so that makes me feel a little bit better on the losing position. And then finally, my final sell stop 38.16. It was down there at 37.42, but no matter what, 38.17 goes below that, I will be all out of play, and you should be too on a closing and a day basis. For long signals, only got 2 of them, and they were both ad signals. MMAC, kind of a crazy volatile one, extremely speculative. Keep it tiny, tiny, tiny. See this volume surge today? It's only traded 16,000 shares per day. Averages right around 8,000 shares per day. I believe it's now up to 12,000, so it's averaging 12,000 shares per day. Looks like it's under clear accumulation to me, but still, it's a volatile issue, and you could be stopped out of it easily if your stops are too tight. So, you know, I'd keep looser stops on this one. Mine's all the way back here with this low, 12.54. Today I had half my sell stops at 12.74. You can see it hit 12.69 today. Didn't trigger any of my stops, but that being said also, so you think, oh, well, you know, you got fortunately lucky. You did good on that one. Yeah, well, you know what, HBCP, I changed my buy stop order to a market order. Since it closed at the high day, it means I put it 1 cent higher, 26.25. Do you think my 26.25 limit order got hit? No. So, you know, it is what it is. There's some good, there's some bad. But MMAC, 0.5% of my account capital is going into another ad. So it'll be like another 150 shares for me. But if I was you know, going after 1,000 shares per buy order, you could believe I'd be using not only limits but buy limit stops to make sure that they don't run the price against me. But pretty good technical pattern overall. And then finally, the only really high quality long signal tonight, it's not even really that high quality because the base is pretty short and 200-day moving average is far away. But UHaul's producing another pocket pivot point signal with the previous signals working, which means it's got to be taken. It's not only a CanSim quality stock, but today it joined my pre-perfect speculator scan. Only 49 stocks currently qualify for it out of 10,000. And UHaul is one of them. This is day 1 of UHaul being in here. It was also confirmed in my new 52-week highs on above average volume scan and my that's it. It wasn't in the price volume bot scan because it can't be, because it trades too little volume. So it was actually confirmed in the new highs 52-week scan only. I'm sorry. That's it. But perfect speculator pre-scan, CanSim quality scan, 0.5% for each ad signal for 1% total. And because it's so thin, I'm not going to ignore the new high scan. I'm not going to add any to it. So it's not going to be 1.25 or 1.5, just 1%. So 1% UHaul, 0.5% MMAC. Both are pretty decent looking technical patterns in a pretty weird rally off these market lows of September.